Hi, this is Joseph, and it's Saturday. It's September 8th, 2012, and we're going to review some of the trades that we took with non-farm payroll. I'm going to show you some of the techniques that I can teach you if you want me to show you how to use them. This particular trade that we're going to review today is the continuation breakout trade. And the continuation breakout trade is the one that will put me in the path of a breakout and then in the path of that trending move. What we're looking at right now is the euro dollar, and this is for the most part right where price closed on Friday. And basically what you see is Friday's price action, and then Thursday's price action, and Wednesday's price action, and then we can go as far back as you need. But we're going to take a look at these 3 days right here, leading right up into Friday when non-farm payroll was released. Now, I'm going to show you the indicators that I use for this particular technique. But in the Learn Forex Trading in 30 Days ebook and video course, not only am I going to show you how to use this strategy, but I'm going to show you how to use it on different time frames. I'm going to show you how to use it on different currencies, and then I'm going to teach you all of the tips and tricks that you need to know to make this trade work for you consistently. Basically what we're doing with this particular technique is trying to identify consolidation. Consolidation is often one of the most challenging, I think, trading environments for a lot of traders, especially new and novice traders, because there are a lot of different highs here, as you can see. If I move my cursor back over here, there's another high, here's another high, here's another high. And after a while, if you stare at the charts too much and you really don't have a solid system to help you identify where support and resistance actually is, it gets really confusing. And if you take a trade as price is moving through support or resistance and it's the wrong level, it could lead to a false move or a head fake, and then you'll ultimately end up getting stopped out. The way I teach you how to use this is to identify the appropriate or the most significant support and resistance levels relative to the time frame you're trading. Now, on the euro dollar, when I take this trade, the continuation breakout trade, and I use it on the 1 hour time frame, which is what we're looking at right now, we're looking at the 1 hour time frame, I usually earn about 50 to 60 pips. So since that was the high of the week, I moved my resistance level to this point here, which was a high of 1.2650. That was my high, that was my resistance level. At that point, I waited through the rest of Thursday, and then when the market opened on Friday, leading into non-farm payroll. Now, when I get a closed completed candle above resistance, in this case, because I'm thinking about trading it higher, or below support, here is my signal candle right here. Now, what I do is I wait for the candle to close. I don't assume when the candle's open that it's going to close above resistance. I actually have to sit and wait for that candle to close before I analyze it, before I confirm it. Once this candle closes, I then look at my indicators. I don't look at my indicators until I see something happening here in price, until I get some kind of signal here in this price pane. There cannot be any divergence in these indicators. I use the CCI here. That's the first indicator that I look at. And then of course I have the MACD, and then I use the Bollinger Bands. The Bollinger Bands have to be moving in a very specific way on that signal candle, or I won't take this trade. And in this case, everything lined up, all of my indicators lined up. Now I do use one more indicator here on the chart. Of course you can notice that there's a 20-day moving average here with the Bollinger Bands, but I'm also using the fulcrum. This is the pivot point. This is the daily pivot point. This is sort of the center. The one that I really focus in on is the pivot point, or the fulcrum for the day, that center point. That's the one that really has the biggest impact on price, at least to the way I prefer to trade it and when I use this particular strategy. So another indication of price potentially moving higher was that when I got my signal candle, price was above the daily fulcrum. You'll notice it right here. The fulcrum on Friday on my charts was 1.2613. So I was clearly in the direction of more momentum. Now, when I enter this trade, it isn't on the close of this candle. I have to wait for a 3 pip entry, which means when I get my signal candle, I have to identify the high of that candle. And the high of that signal candle was 1.2684. With a high of 1.2684 and a 3 pip entry, I can't get in until 87. So my entry is at 87, and on this pair, as I mentioned earlier, I usually earn about 50 to 60 pips. I took 55 pips on this. So 87 with an entry of 2687, this high went all the way up to 28.16. There was just a little over a 100-point move here in the euro dollar. Now this candle right here is non-farm payroll. So you'll notice that this is a 1-hour chart. Of course, non-farm payroll came out at 8:30 New York time. You'll notice how strong that move was on that non-farm payroll candle. And then it's just a matter of waiting and holding if there is any more distance that needs to be covered for you to reach that 50 to 60 pip target on the euro dollar. Now I took this same trade on another pair and I'll show you exactly what it did. Right now what we're looking at is the euro yen. This is the euro/JPY. This is the 1-hour time frame. Now I can usually take the exact same trades, but sometimes they set up a little bit different. They might set up maybe a day earlier or a little bit after one or another currency sets up. So I took this trade, and this trade set up on Thursday. This didn't set up on Friday as it did with the euro dollar. But let me set this up for you, and I'll bring in the chart just a little bit tighter here so you can see what's going on. So here's Friday, here's Thursday, here's Wednesday, here's Tuesday, and Monday. So prior to the week, last week, it printed this high, and I used it as my resistance level all throughout most of the week until Thursday. You'll notice that resistance level, how it tested 1, 2, almost 3 times here, and then it started to break out and move above here. This was my signal candle. This was my continuation breakout signal candle right here. There was no divergence in the indicators when it set up. The Bollinger Bands were moving just the way I need them to. And then I take this trade and go long. Now when I take the continuation breakout trade on the euro yen, I typically earn about 100 to 150 pips. It really depends on where resistance is. I want to get out of the trade before resistance is reached, and that is based on the 4-hour and the daily chart. You have to be aware of all significant support and resistance levels on the larger time frames. Now with this, I'll go ahead and open this up just a little bit more. Here's my signal candle right here on Thursday. This candle closed with a high of 99.27. So with a 3 pip entry, I can't get in until 99.30. And you'll notice right up here at this spike high, price reached 100.42. That's 100 pips. So if you'd like me to show you how to use this particular trading strategy, remember it puts me in the path of a big breakout trending move. You were able to see that on the euro dollar I earned about 55 pips, on the euro yen I earned about 85 to 90 pips, and then here it works on gold, it works on futures. So if you'd like me to show you how to use this technique safely, reliably, you can be comfortably using it right away, making money using this trading strategy, and I can show you exactly how to do it in the Learn Forex Trading in 30 Days ebook and video course. You get many videos that will walk you through live examples just like this one. Go ahead and click the Add to Cart button at the bottom of this page, and you'll get instant access to all of the bonus material in the ebook and these trading strategies. Thanks for watching, and I hope you did really well during Non Farm Payroll.